welcome and thank you so much. And how lovely it is to have an audience. Small, but perfectly formed. We don't need any more. This is really, really great. This is one of my first conferences that has not been done from my front room, so it's lovely to be here with you. Welcome. Marek, I would like to invite you onto stage. This is a session that we're going to be doing about prosperity, redefining and strengthening a post-growth emerging Europe as part of the summit today. And the hashtag, ladies and gentlemen, please do start tweeting, is hashtag EE Awards. So as the young kids apparently say, let's get this trending. I'm not a young kid, so who knows if that works. We have a very esteemed panel with us, still joining us remotely because, you know, old habits die hard. And we'll be introducing them to us. Well, they're hopefully here already. That's fantastic. The miracle of science. That's brilliant. So we're going to, Marek, thank you. We're going to be talking about a post-growth economy. Now, that basically means that life is put at the very center of everything to maintain life in terms of the center of economy, social activity, everything that makes life go ahead, a post-growth economy. What we want to ask is what this actually means for an emerging Europe, where most countries are, frankly, still in the process of economic convergence with the western half of the continent. How are we going to ensure that this post-growth, this concept of post-growth economies don't leave the other countries lagging behind? And actually, as usual with emerging Europe, we're going to push it a little bit further. We're going to ask how these countries within the emerging Europe frame in that region, how they actually go forward, go beyond what their Western counterparts have to offer. So, as I say, we've got a fantastic panel, and they're all here with me. Isn't it typical? The person who is here on stage with us is the last one. The shortest distances always take the longest to travel. Marek Dietl, Chief Executive Officer at the Warsaw Stock Exchange. Lovely to have you here in person. We are also joined by Beata Javorcik, Chief Economist for the European Bank for Reconstruction and Development, and also a Professor of Economics at the University of Oxford. Welcome. Oleg Krot, the Managing Partner at TECHIIA Holding, and Jurica Novak, Managing Partner for the Central Europe Department at McKinsey and Company. Lovely to have you all here with us. Isn't this great? Lovely to be here with you two in person. So let's get cracking. Marek, you're here, so I'm going to put the first question to you because I can see you and you can't avoid my eye line.
It's a strategic advantage to be here.
Yeah, do you know? How, when it comes to economic growth and this kind of concept of post-growth economies, and we can't miss the elephant in the room, of course, the COVID pandemic and all the rest of it. How do the two work together? And are we, since the pandemic, are we moving away from this concept of short-term economic growth and profit and just focusing on well-being, life, and the rest of it? I wonder if you can give us a big thought. No pressure there.
Good. Let me start with a kind of historical parallel. Most of what we call today emerging Europe countries in the 19th century were somehow occupied by the other forces, including Poland. And if you look, for example, in TECHIIA was the highest industrial or most industrialized country or province of Austrian-Hungarian Empire. When you look in Hungary, Hungary was strongly benefiting from the demand for agricultural products across the Austrian-Hungarian Empire. Kingdom of Poland, which was actually occupied by Russia, 90% of the industrial output was actually sold to the Russia, so exported within the Russia. So all those economies of what we call today emerging Europe are usually doing quite fine in the large markets. And now the large market of the European Union, or for some accession countries to be in the European Union, so they have also some tight links to the European Union, they have to face a new challenge. It's what is called here post-growth, or I call it a different growth pattern, because as a societies in the West, we want to consume less resources, so we measure our economic well-being not just by the GDP, but GDP subject to consumption of crude oil or whatever other energy sources, or agriculture, production of waste, and so on. So it's a completely new setup, and it's like a little bit like with Industrial Revolution, which came later to today's emerging Europe, but then it was a quick process of catching up, especially in TECHIIA, partially also in Poland. We have to also, in this post-growth world, we have to also catch up as a emerging Europe and offer something what is really needed in this in the Western Europe or most advanced societies of North America as well, or Japan, for example. And this is and the competitive edge we have in that actually is a talent pool. If you think about STEAM alumni, you have 100,000 of them in Poland and 115 in Germany, with twice as much population. So we have actually a great pool of talents to offer, and the services which can be offered, like in IT or broad sense of technology, are not that energy intensive or resources intensive. So we can build an edge here. The other area where we can be also very competitive is that our agriculture structure is not that industrialized. And there is a growing demand for quality food, which cannot be that much industrialized and prefabricated. So again, we should not go too fast with industrialization of our agriculture, but we should stick to our knitting. So it's small, relatively small farms, not that much industrialized, but very high quality food. The same goes for traditional industrial output. When you think about, I will be referring to Poland as a country I know best. We had GDP of $10,000 per capita in 1989 before the changes, but large fraction of this industry were actually not that competitive, and it bankrupted through the course of the years, but some competences remain, and the new industry was built up. And for example, in the last few years, Poland was responsible for 2/3 of industrial jobs created in the European Union. So basically, it shows that there is a new wave of industrialization of very modern factories, and again, the supply of high-quality labor force, relatively attractive labor unit cost, so the relation between productivity and labor cost, very attractive. And in this way, the emerging Europe can do fine in this post-growth world, subject that we are a little bit more picky when it comes to accepting foreign direct investment, and also the way we foster, for example, an energy strategy and so on is more sustainable than it used to be in the past. So if we do it right, we can be also fine in this post-growth world.
Okay, so an awful lot to pick through, and Marek, thank you as always, because that's a really, really solid beginning. And one thing I immediately want to throw up is, Beata, I'd like to come to you, because we are talking about this idea of a new growth model and a new anchor for reforms. Marek is talking about the benefits of the talent pool, and the idea that agriculture isn't as industrialized, so we get a higher quality, I guess, of as you were mentioning, of food produce. You want to talk about carbon transition in terms of this. Just talk us through what and how that can help the emerging Europe region really catch up, not only catch up, but actually go through and surpass what we're seeing at the moment in terms of the old Europe.
Thank you very much, Kasia. It is a pleasure to be joining this discussion today. So let me start by saying that the new EU member states have been an enormous success story when it comes to growth. But the last 30 years of growth has been a period of easy growth. It was all about catching up, all about investing, all about importing knowledge. Now, the region needs to find a new way to grow through own innovation. And that's much harder. Moreover, innovative firms are more footloose, so they are much more sensitive to the quality of the business climate. And, during the last few decades, EU accession was an anchor that gave direction to the reform process in the region. And once the EU accession took place, this enthusiasm for reform disappeared. So the challenge for the region is to find a new direction for growth and to find a new commitment device. And I think that low carbon transition can provide both, because enormous innovations are needed to implement this transition in practice. And also because low carbon transition gives a very clear policy direction. And if there is a national consensus reached that a country wants to pursue it, it can certainly lock in the reform path. There is a benefit of embracing low carbon transition early. I think countries that get very clear signals from policymakers that they want to embrace it early will be a step ahead when it comes to innovation and adjustment. And countries where policymakers will be more hesitant, they risk lagging behind. Think of an example. Think of exporting firms. Exporters will be pushed to become more green by their foreign customers. But if at home they are not facing the same regulation, they will be undercut by local producers who will be less green, and they will either have to keep dual type of production structures, or they will not benefit from economies of scale, or they will have to choose whether they are focusing on exports or on domestic market. So I think there is a big benefit to choosing a direction early and sticking with it. Because my prediction is that the low carbon transition will speed up before we know it. Thank you.
Okay, Beata, thank you so much. And we're feeling a theme here from what Beata was saying, the emerging European countries potentially reluctant to take a new direction for growth, and Marek also describing it as a bit picky where investment comes from. So Jurica, Novak, I want to put this to you because I know you're keen to talk about the need to change European risk-averse, this kind of risk-averse culture when it comes to keeping up with the pace of change in the world. So how does this part of the globe do that then?
Thank you very much. It's great to be here. And if I may, and I'm sorry, Marek, I will pick on you a bit because it's related to what I wanted to say. In your very interesting and, of course, absolutely right statement that we do all agree with, you mentioned that North America and Japan are advanced societies. Now, this is something that I would disagree with. They might be advanced economies, but they are not necessarily advanced societies. And I think we as Europeans, and in particular Central Europeans, should celebrate good things that we have here. And one of those things is, I would claim, a much more advanced social contract that makes life living in our region perhaps more comfortable. Of course, there is a cost to pay, and there is a fact that North American, in particular, economy is much more advanced than ours. Now, this does indeed tie in to risk aversion. We did a bit of a study on trying to understand what would make Europe more competitive. So what is it that is stopping us in Europe be as successful as our friends elsewhere on the globe? And actually, if one looks at data, we have more startups than North America in Europe, yet they don't scale. For a very long time, we felt that we had difficult access to capital. This has, in recent years, by and large, not been as true anymore, and our companies are able to access capital at different levels of scale-up. What we did find out, for example, in our study, is that our consumers are much more conservative. And they themselves are also much more risk-averse. So the American consumer, especially a digitally savvy consumer, is much more likely to try new things out. thereby enabling American digital companies to scale much faster. And by scaling, it makes it easier for them to accelerate, gain additional funding, build efficiencies, and become more technologically advanced than they were to begin with. Our huge potential lies, as we heard before, in a phenomenal number of well-educated STEM graduates who we just need to be intelligent and find a way how to employ and deploy their abilities. Central Europe has grown tremendously of about 110% in the 15 years between 2004 and 2019, mainly through increase in employment and rising productivity. We have exhausted those engines of growth. And I firmly believe, and I think we institutionally do as well, that we need to look forward to new engines of growth, one of which is digitization. The other one is decarbonization or sustainability as a whole. And then finally, automation. Automation is the most risky of all because, of course, by increasing automation, you decrease employment, and we need to be socially sensitive to a certain extent. There's always that argument, but it's not necessarily so because automation opens up new opportunities for people, so reskilling becomes increasingly important. But given the COVID context and the experience of the last 18 to 24 months, it has shown us that in a special context, digitization has really tremendously taken off. And we believe that there is a huge opportunity for Central Europe to match and leapfrog other more advanced economies. And we firmly believe in that.
Thank you so much. That's a fascinating point. And digitization is something that we will be going on to a little bit more shortly. But I just want to pick up on one of the points that you said in terms of emerging European consumers being more risk averse. Oleg, you talk about a country's development as being an individual process. And it's not just the availability of its resources, but it's also its history and culture. And again, something that Marek already picked up on in terms of the history of former Soviet bloc countries. But when you say that it's an individual process and you describe it as not having the perfect recipe for it, is there something that brings these countries together and that they have together that will then push them forward? Oh, Oleg, I'm not sure who's going to unmute. I thought I wouldn't have to ever say this again in a live format.
I'm sorry, I'm here, and I'm listening to you. I just forgot to unmute it. So, what is keeping them together? Of course, for technological business, the globalization is a must. So, you have to produce where it is better to produce, and not think about even creating some product that is produced for one single region or one single language, a country, not depending on their cultural background. So if you're making any kind of a technological business, except you're making like the old style Ukrainian IT business when you were just selling programmers hours, but not selling the complete product and getting all the profit. So if you're making something right now in IT and technological business, you should make the product which is needed and can be sold in every country of the world. So getting back to your question, yes, of course, these countries have a lot of cultural background, and we have a pretty easy to access economies, especially if we're talking about the economies of the European Union. But I would say that it is good to label the countries for Central Europe or Eastern Europe. When you're going to the technological business, you should be international. You should make your product global, not thinking about any region or any language that you're producing this product for.
Okay, Oleg, thank you so much. Thanks for talking us through that. And good to have you with us here as well. Beata, let's just pick up on, and Marek, I will come to you in a moment, but Beata, we mentioned, we've been hearing digitalization a lot, and I know that you talk about the crucialness of it, but you have concerns about the winners and the losers, given what we've been seeing in terms of the pandemic speeding up that digitalization process.
Thank you, Kasia. So the pandemic has sped up digitalization. It has broken the link between where we live and where we work. This creates an opportunity for the region, for emerging Europe, to export services to the West, because people without leaving their armchair can actually be employed remotely. That means that services firms in the region can export more, as virtual meetings have become much more accepted and travel has become less essential. What we also saw during the pandemic is the increase in online shopping and firms, even SMEs, embracing online sales. And according to the data the EBRD collected, this was even true in countries, going beyond EU, Tajikistan, Turkmenistan, places where online shopping was in single digits when it comes to the percentage of population. Now, what this embrace of online trade means is that some subnational firms that were selling only locally have suddenly become national suppliers and maybe even exporters. But there is a flip side to it. Greater embrace of online trading means greater competition from firms of outside the region, outside of the country. So digitalization is going to be a shock, just like globalization was a shock, which is going to create lots of opportunities for high productivity firms, for good performers, but maybe quite difficult, maybe quite a challenge for less productive, less well-performing firms. Similarly, if you think about workers, this process is wonderful for young, digitally savvy people, but it is less kind for elderly workers whose ICT skills are much weaker. At the EBRD, we looked at various data sources comparing ICT skills of people who are 55 years and older in our region as well as in Western Europe. And you very clearly see, no matter what measure you use, that older workers in Eastern Europe have much lower digital skills. And there's a real risk that they may get pushed out of the labor market, because as this process of digitalization progresses, it may be much harder for them to cope. Thank you.
Thank you so much. Again, an awful lot to unpick in all of your answers, but let's just pick up with Marek on that point of the bigger embrace of online trading. In terms of the stock exchange after COVID, what have we learned? What have you learned? And how does that then go forward, moving forward, when we're thinking about the future of all this?
So maybe I will start with what Oleg actually was saying, and it was a very valid point that we have to distinguish in this digitalization space, and was also Beata was mentioning, when we have a pool of talents and we just do a body leasing, and the difference to products. When you have our own products, it's also related to what Jurica was saying about this risk-taking approach. Of course, it's much easier to run a business which you, on one hand, you hire people at the local rates and you sell them at the global rates, and you commission the difference. Yeah, that's very easy business. So, for example, in Poland, you have 40,000 IT companies, but the value added per company is pretty low. The only difference is when it comes to video gaming. Warsaw Stock Exchange, I know, it's my favorite topic. 10 IPOs already this year, so we have 70 companies listed in this space. So clear number one in the world in terms of number of companies, compared to less than 50 in Tokyo. So with really, and this is an industry which survived or even benefited from COVID. Because, Beata, I'm very sorry to tell you, but people do not spend that much time on MS Teams and meetings. But they spend a lot of time gaming. So I can assure you that
I can concur that. Yes, absolutely.
So of course we hope that it's gaining productivity, but actually it's lower the cost of access to to entertainment. And even ancient Romans knew that entertainment and bread are the vivid parts of our human identity. So and this so from and coming to the stock exchange things, it's also related to what Jurica was saying about the number of startups, but scaling up. Simply the depth and the quality of and the size of the public markets in Europe compared on a per capita basis to UK, you can it's much lower. And if you compare absolute numbers, you compare to the US. What is, by the way, a sign of advanced economy and advanced society is quite miserable. So we are very good in creating startups and exporting them to the Silicon Valley in a very simplistic way, because they can get in the US, and as a US company, much greater valuation. So summing it all together, I'm not that much worried about progress in both digitalization and robotization, automatization in the in emerging Europe. I think we are societies accustomed to the constant changes. You know, wars and wars, communists, now capitalists, turbo capitalists, now more sustainable capitalists, and so on. So people are quite good in adapting themselves to new situation. Also, both digitalization and automatization bring actually quality to our work, because the tasks which are repeatable and with are taken over by the machines, and actually our intellectual value added and our humanistic part of our job is the share of humanistic part of our job is increasing. So I'm quite positive on that.
But are you not concerned about those that will get left behind? Because as you know, we heard there from Beata, there will be a group of.
But for example, the Warsaw Stock Exchange, we introduced software robots for plenty of things. We have not laid anyone. I mean, we found other tasks for people. But, you know, what is the purpose of, if you want to create a report based on our data, the people waiting 2.5 hours. So it is done by robots in the night now. So, and of course, this 2.5 hours per times 17 employees, we should lay off 2 people, yeah? But it never happens. I mean, it's actually the situation is in the labor market. When you look at the chart with unemployment rates in the European Union, the lowest unemployment rates are exactly, you have Hungary, Czechia, Poland, you know, this type of countries. So basically, I don't believe that it's like people were by the end of 19th century afraid that the machines will take over their jobs, this ludistic approach. I mean, it didn't happen somehow. So it's a question if the societies can adapt to the new situation. And also, I to subscribe to what Oleg was saying, we have to take another approach, and we should be more self-confident in building digital products and conquering the global market. The talents as a base is there. We have simply less experience in globalizing our businesses, because you learn this over generation. But with the new generation coming to the stage of entrepreneurs, we'll be doing fine.
I'm desperate to ask, average age of the employees at the Warsaw Stock Exchange, do you know?
Oh, it's relatively high. I'm one of the oldest, because the people who 30 years ago started are still with us. So it's almost 50 years old. So,
okay.
So basically,
that's not that old. Come on. Sorry, I'm putting you on the spot there, Marek. But that's all good points. And the point that you're talking about, especially, you know, when we talk about the gaming industry, especially, we've seen what's been happening in Poland, phenomenal. So, Jurica, I want to put that to you. New industries that are coming through, and they have to think about sustainability. Does that put them on the back foot then, when you talk about trying to push through, trying to break through, but also being sustainable? What do you reckon, Jurica, for you?
I don't think it puts them on the back foot at all. Actually, it gives them a huge advantage against the incumbents. So if you think who are the future shapers of our lives, of economies, and so on and so forth, of course, there are going to be some players who are there today. And we would expect that there will be a large number of new companies who are only emerging now. Now, new companies that are emerging now can build ESG into their corporate fabric and into their purpose. Whereas the incumbents, the relevant companies of today, need to adapt to that, because by and large, they are not where they want to be and where we would want them to be collectively. So I think this is actually a huge structural advantage to the new companies. And also, as we know, capital flows are becoming more and more sensitive to a company's approach to sustainability. So those who will have been able to demonstrate that they are thinking about circular economy in everything that they do will have a more advantageous approach and will be highly successful, we believe, in attracting capital in order to help them scale, as we heard from Oleg, on a global market, which they must aspire to do.
So, Oleg, thank you. Oleg, let's throw that to you. So globalization, being on a global market is an absolute necessity, and any business that's not on it will fail. What do you reckon?
This is I completely agree with you. Actually, this is the part of our philosophy of our company. We were always, since 2014, 2015, me and my partner, Yuri, we decided that we will never make any projects that is dedicated for Ukraine or for Europe or for any specialized region. We will make only the product that can be consumed worldwide. So completely agree with you here. And about the Beata, about the automatization and about the digitalization that will be somewhere in the future. I don't think that it didn't come to our lives already. So right now, the United States are much more forward because they already accepted it and they are already living with this digitalization without being afraid of robots taking the part of the jobs of the real people, etc., etc. So they really, we should really understand. I'm not sure if everybody agree with me, but in future the energy will be cheaper than we have it right now. The robots and any automation that will be available in future will free some amount of people and will take the jobs from some amount of people. If we will not be afraid of this, if we will think about how we will live in like 100 years with it, without having the jobs that we're having right now, this will be the only way for us to build the economy right now, the economy that will be much better than the economy of the Northern America or will be competitive in the future world. So this is what we should think about, but not
Oleg,
be afraid of these things.
Well, that sounds very good, and it's lovely not to be afraid of this kind of stuff. But I do have to, as Beata was saying, there will be a group of people that will be left behind. What happens to them? I mean, there's that saying in Polish, if you're, sorry, anybody who's not Polish, if under communist times, if you're lying down or if you're working, you'll still get your money. But there will be a group of people that will be left behind. It's inevitable, even those that cannot get their heads around technology. Marek, you
how we tax robots? That's the basic question. I mean, yeah, sure, because robots will create enormous return on capital because, as Oleg was saying, we will be sooner or later living in zero marginal cost economy. So energy from renewable sources is zero marginal cost of robots working for us, and how we tax robots and how we transfer the money to people. And this is the basic question you are asking. And
but Marek, we can't even tax the big companies.
Yeah, but we can maybe tax robots, but what can be the means of taxing is digital currencies. If central banks start to issue digital currencies, we know exactly how the money what are the money flows, and also we know exactly, and we can introduce some social policies giving people this digital currency, but for example with some limits how they can spend and so on. So we can actually with next wave of digitalization of financial markets, so digital currencies, we can actually adjust our policies for both taxing robots, because this is the question, basically, and creating very smart policies to support people who are left behind, because I don't want to base on the first 3 robots which are introduced, or 17 robots we introduced at the Warsaw Stock Exchange, but when we have 50 or 100 of them, of course we might be contemplating getting part with some of our employees. So basically this is a very fair statement that generally the social policies should adjust to the zero marginal cost economies.
Okay, Oleg was just wanting to pick up on something like that. So Bitcoin is the future, or there are other cryptocurrencies available, I guess. Oleg, what's your thoughts on this?
Well, first, I completely agree that it's all about the policies. We should think what we will do with all these people. And I'm sure that we should be ethical in our thoughts and pronunciation. But I think that we should really think about what we will do with all these people and what policies will give these people the reason to live and to do something. And we should think about it right now without thinking that this will never happen, first of all. About the digital currencies, of course, this is the next step that I think that the banks will be stopping this a little bit, because everything works right now as it is good for the banks, for the national banks. Everything is under control. And digital currencies can really bring us to the next step of the financials. But we should, once again, we should develop policies on how we will make this market and this part of our life how we will keep it under control. Because you're right, we can't. Right now, we can't tax even the big companies, because the amount of the instruments that they have to avoid taxation is so big that we can't. The government can't do anything with the cryptocurrencies. It's turning into the hell. So we should implement all these new things as fast as possible, but developing the policies that will keep under control everything that helps us to sustain all these mechanisms that we use right now for giving some good things to society. So,
all right. Okay. Sorry, Oleg. That sounds, again, it sounds very positive, and you've got me here to play devil's advocate. Beata, is it also positive, with your chief economist hat for the European Bank for Reconstruction and Development? Digital currencies are the next step forward, are they? They're just the inevitability of where we go next. They're a great thing.
Certainly, we will go there. But let me come back to the question of losers and workers and technology. I think technological progress is like a tsunami. We cannot stop it. And what history teaches us is that as jobs are being destroyed, new jobs, new products will emerge. But we need to remember that there is this transition period. As workers lose jobs, they need to get retrained and they need to find new jobs. And we need to remember to take care of them during that time. So the idea is not to protect the jobs, but to protect workers. And if we follow that principle, how we tax, whom we tax, we can get there in many ways. But we just should remember to protect workers, not jobs. Thank you.
Well, I think on that rather holistic and lovely and inspirational note, we will leave it there, because I don't want to get into trouble with with anyone else. Already Marek's been shaking his head at me. But Beata, thank you so much. Beata, Javorcik, Marek, Dietl, for being here with us. Oleg, Krot and Jurica, Novak, thank you so much to my esteemed panel. It's been quite a good and a conversational conversation, but I think a little bit of tension there, so that's always good. We've learned a lot, and I will finish on Beata's words. We need to think about people, so be kind to each other as well. Lovely to see you all. We'll have to catch up for a coffee very soon. Thank you so much, Andrew.
Thank you very much, Kasia.